UK wage growth slipping in the 3 months to August, indicating a cooling of labour market pressures here. Let's get the details then, the context, the analysis with Lizzy Burden, our UK correspondent, of course. Lizzy, break down the data for us then.
Yeah, Tom, average weekly earnings fell more than economists had expected, but when you strip out bonuses, they came in line with expectations. So, as you say, the overall conclusion is that the cooling in the labour market continues. From the Chancellor's perspective, Jeremy Hunt, he says this is welcome news because you've got inflation falling, real wage growth at the same time, so there's more money in people's pockets. And then from the Bank of England's perspective, if you look at the reaction in the pound there, it's weaker 0.3% against the dollar. It suggests that markets reckon the Bank of England isn't going to need to continue hiking, although there is this debate, Tom, on the Monetary Policy Committee about how much previous hikes have fed through to the economy. So we heard from the chief economist Hugh Pill yesterday. He says it's about half of hikes have fed through, whereas if you listen to the Dove Swati Dhingra, she reckons it's only about a quarter of hikes. Hence why Pill reckons that you may need to get more hikes. He hinted at that yesterday.
OK, so that's the Bank of England story. This data, just the first of a number of data points that we're going to get this week and next then, Lizzy.
Yeah, we get the inflation numbers tomorrow. CPI expected to tick down from 6.7% to 6.6% in September. But I should just point out, Anna, that this labour market data has been unusually bifurcated this month because of a lack of responses that have skewed the numbers. And so we've got the payroll and wage growth numbers today, and then we have to wait till Tuesday for the unemployment and employment numbers, which are arguably more important for the market. But this is something that Hugh Pill was talking about yesterday. He pointed out the discrepancy between official reports on jobs and the anecdotal reports, which is what has convinced him that the official numbers are a bit of an anomaly. And that's why, if you think back to the bank's last meeting, they held rates and there was a lesser emphasis on hot wage growth, which the bank's really gone on about before as an indicator of domestically driven inflation. But now there's this pivot to more forward-looking indicators, as of course you might also expect as we get to this peak of the tightening cycle. We may already be there.